Good evening. Welcome to the ShadowTrader Video Weekly for Sunday, January 8th, 2012. This is going to be a very interesting video. I hope that you will agree with me. It's essentially going to touch upon three things that I need you to tie together. The first one is going to be the Ask the Shadow column in the weekend update from last week, talking about where I thought the market was headed in 2012, and also the Ask the Shadow question from a gentleman named Will from Michigan that came in for this week's edition. So check the Ask the Shadow columns, especially the one that's in the weekend update that you're looking at right now. And then I also want to tie that in with what's going on in the markets right now, and also a video on YouTube that I shot on Wednesday of some live ES trading that I think if you watch that after you watch this video, I think is going to completely crystallize my thoughts very well, and it's going to completely put it all into like perfect perspective for you. Okay, so in the email, the gentleman named Will is basically echoing the sentiments of a lot of people that email me and say, you know, where's this market going to go? What's it doing? Et cetera, et cetera. And you'll see in the answer to Will that I told him I felt that people in general should focus less upon what's going on in Europe and news or the fear of news, and more upon the two major questions that we need to ask constantly in order to objectively look at the markets, and that is simply, which direction is the market going, and is it doing a good job getting there? And really the second question is the far more important one that I'm going to spend more time on. The first one should be relatively easy to anybody who has basic chart reading skills. You can see if a market's going up or not. You essentially just connect the highs, connect the lows. If you're making higher lows like here, the market's going up. If you're not, it's going down, etc., etc. But within this pattern of slightly moving higher in the markets, the question is the market doing a good job getting there? And that's what I want to focus on in this video. So in the response in the Ask the Shadow, you'll see that I basically said if I had to grade the market right now on if it's doing a good job going up, or rather, what type of a job it's doing going up, I give it a C+. I really do. I think it's just basically just slightly better than average. It's not going very far. I still think that we kind of crawl up to that 1310 to 1320 area, but I think that's probably going to be it for this year just because of the tone of how the market's doing so. So that being said, we want to realize that there's lots of different ways that we can profit from this in knowing this. Essentially, we can look at a market that is advancing in a very weak manner and say to ourselves, okay, this is where we want to eventually short it on any spike higher, because we realize that the market is not really doing a good job going up. Therefore, it's not facilitating trade with the buyers very well, and they're going to get frustrated, and we should have a counter move soon. Or vice versa. You can say the market is moving down, but it's not doing a very good job going down, so therefore I should buy this market. This works in multiple time frames. Most of the work that I do is with futures trading intraday, and I'm going to touch upon that in a second, and the video that I'm going to ask you to take a look at is going to basically show you that live as it happens during the day. But I always want to stress to people that this sort of analysis that comes, at least for me, from day-to-day ES trading is extremely applicable in the bigger picture to everything. Is that we can analyze the broader market on the daily and weekly time frames, even monthlies. We can analyze individual stocks on the longer term time frames. It doesn't matter if you're not a futures trader. What I'm about to show you and talk about is really applicable to all types of trade, and I want you to, that's really the takeaway that I want you to have from this whole thing. So to show you a live example, for instance, of how you put this into perspective, as I was saying before, I shot a video on Thursday the 5th, I believe. It was Thursday the 5th of live trading in the ES. And much of the video, the whole video deals with getting long at the lows of the market and having a lot of conviction, and you'll see me get long and have some profits, and I give them back, and I get long again and I give them back, and then I keep getting long because I just know. And essentially the day was this one here, Thursday, that went up really hard off the lows. There was a good playable move. And one of the reasons why I had so much conviction in getting long was the simple fact that I didn't think the market was doing a good job going lower. What the market was doing up until then was actually going lower. It had moved lower here from the high on January 3rd, which was Tuesday at the start of the year, right? Backed off a little. Then it tried to go lower here in the SPX on Wednesday, and then Thursday we tried to go even lower, but we weren't doing a good job of it. So I had a good idea that buying somewhere in this area was going to bring the market higher. One of the things that I look at to gauge all of this is market profile. And again, some of you are going to look at this and think, okay, this is very, applicable mostly to day trading. But if we use this type of analysis, I really think it can help you in the longer term. So as this video is unfolding, I'm actually looking at this during the day. This is probably something new to a lot of you guys, but I use it very, very much. And the more I get involved with this whole chart you're seeing here, the more I'm a big believer that the structure of the markets here is really very, very important in figuring out which direction the market's going to go in the short term, and then we can apply this also to the longer term. So very quickly, to simplify what you're seeing here essentially is that this is the daily range in the S&P futures each day. And again, I have to very much simplify just for sake of time, because I could spend hours on this. But the simple fact is that these are the last 4 trading days that we just saw, which was essentially the whole week, because Monday the market was closed. So here's January 3rd, 4th, 5th, and 6th. And every one of these letters is a 30-minute time period where the market traded. So during D period, all these charts start with D. The market opened here at the O, traded here during this time period for this 30-minute period. Everywhere you see a D, and then from 10 to 10:30 in the second 30-minute period, it was all the E's. So this was all the 30-minute periods, and it just builds out. So essentially, what the profile tells us is how much time was spent at each price level. Okay, at each individual price level, and it always goes by quarters in the S&P futures. Depending on how many letters are lined up, we know that in X number of 30-minute periods, the market was there. So and then wherever the market hung out for the longest amount of time, that's your point of control, which are these black lines here, and these brackets indicate where 70% of that volume happened. So a lot of you that have been following my stuff for a while have heard me talk about these terms such as point of control, value area, etc., and you probably, maybe if you're not a day trader, you wonder, what is he talking about specifically? Well, now I'm showing it to you essentially in, picture form. You're seeing it right in front of you, what it really looks like. So back to the original purpose of the video and what I started with, where I was saying, what direction is the market going, and is it doing a good job getting there? So in the video that I'm asking you to watch, which by the way is right in here, you're going to go to our YouTube channel here, and I want you to look for this video here called Live Futures Trading 105.12. You will see that I'm essentially getting, this video was shot here on Thursday, and I'm trying to get aggressively long as early as possible here in the D and E periods, early in the day, because I'm very, very confident the market is going to rally hard and close to the upside. And I end up being right, blah, blah, blah. You'll see that in the video. Why? But why? What was the reason for me having this conviction? Well, most of the conviction came from 2 things. One was the fact that the tempo of the market on Tuesday and Wednesday was very slow, and I didn't think that was sustainable, right? The market was headed down, backing off on Tuesday and Wednesday, but it was backing off in a very, very slow manner. And one of the proofs that the market was backing off in a very slow manner is the simple fact that you can see that lots of time was spent at each price level. Whereas when the market is really shooting up hard, the profile, which is called here, its structure is very narrow. So you can see here, price just went boom, 68 to 72, like boom, shot right through it. Didn't spend a lot of time there, right? Here, the profile is relatively narrow. It kind of, down here, very little time was spent, so there's almost no value here, right? But notice how the market was acting here in these 2 days when it was trying to move lower. It kind of, look, huge amount of value here. Lots of time again. Then it, moves a little bit lower. Then the next day when I was a buyer, again, off the open, good amount. This is, at least 4 30-minute periods were spent here, right? These are called TPOs, they call them, right? A lot of time was spent. right? And yet the market is not really moving lower. So sellers are constantly trying to get a foothold, but they're not doing a very good job of it. And that can't last forever. So whenever you have a situation where one side is trying to push the market in one direction, not doing a very good job of it, you have to assume that eventually those people are going to give up. As I always say, the market never turns because a bunch of smart people come in at the same time and say, ooh, this is the low here, I'm going to be a buyer. It's really because the other side, that is the counterforce, in this case the sellers, is they just basically give up and walk away, or they run out of bullets, as I like to say. There's none of them left. All of the people who wanted to sell their futures have already sold them, and they're just done selling them. And you can see that very clearly on the chart here. If I go back to the chart of the S&P, I put it on a 15-minute, and I want to show you something. Here's 105. Here's that Thursday morning of 105, right? Actually, this doesn't show up very well. Let me show it to you on an ES. ES is better because you can see the gaps. Here's that action on Thursday where we gapped lower, and again, did nothing. Sellers trying to probe it lower, and then here, out of the blue, and if you were watching this during the day, right, you would have said to yourself, wow, this is just a huge explosion. You immediately would have thought to yourself, what's the news? What happened? And then the market just took off for the rest of the day. There was no news. Nothing happened news-wise at all. It's just a simple fact that the sellers who were trying to sell the market the prior days, they just weren't doing a very good job of it, and there's none of them left. They just kind of basically gave up, walked away, and then all of a sudden there's none left. So there can only be buyers, and if there's only buyers, price has to move up very, very rapidly, and that's essentially what happened. So I want you to check out this video that I shot, and like I said, just go to our YouTube channel, look for ShadowTrader 01. And again, the main thing I want you to keep in mind, the main reason I want you to watch this is because you're going to see a real-life example of using this concept of which way is the market going and how good of a job is it doing. And when the market's not doing a very good job getting to where it should be going, you have to be thinking opposite, or at the very least you have to put the yellow light on, right, very, very quickly. So applying this now to the bigger picture, all right, we can see that the S&P essentially really is not doing much of a good job of doing anything, right? Is that Thursday that I've been talking about, which is this day, had the big reversal to the upside, and yet Friday was a very balanced day. In profile talk, we call this a balanced day, right? Or some people call it just rotational, where it just rotates back and forth between people that want to get in the market for the long term, and then those short-term players that are just batting it back and forth, like locals versus institutions, or however you want to call it, right? And in the profile, you can see here, this is Friday. This is basically known as like a very normal distribution, very perfect, right? Looks like a nice bell curve. The fattest part is in the middle. There's a little bit of range extension to the downside, which really just came into, was inside of the prior day's value area, which was here. Didn't even come down to the low end of value, and ended up closing right up in here, relatively unchanged, all right? So I'm not expecting that all of you are going to run out and get this software and start trading market profile and trading futures. Although it'd make me happy, since I think it's really cool. But I do want you to pay attention to the concepts that are here in the bigger picture. While stuff like this helps you to see more clearly where, for instance, value is overlapping, which, by the way, that's kind of a negative thing in terms of market direction, right? The market's not doing a good job, as we've been saying, going in a certain direction if the areas of value are touching each other and overlapping, because what it's telling you essentially is, okay, most of the players feel comfortable with price right here, and what happens the next day? Well, we're a little lower, but most of the players feel comfortable with price right here, not a major shift in value from the next day. And what happens the next day? Well, they're still kind of comfortable right here, and then all of a sudden something has changed. And we move back up to the high end, and here, what do? They build a lot of value where? Same place they did 2 days ago, right? And then the next day, Friday, what happens? Well, they're just, it's the same thing. Price is very comfortable here at 71 to 75, etc., right? So again, as I'm saying, is even though I'm not expecting everybody to look at it this way, you can do the same analysis really just by looking at the charts, right? I mean, let's just be very objective. If you think the market is going up, and I do think it's going up, right? Right now, basically we're in an uptrend, right? You can easily just connect these lows. Ask yourself the question, how good of a job is the market doing getting there? to me, not so hot, right? I mean, like I said in the Ask the Shadow, I give it a C+. I mean, is it because we're in the first week of the year and the larger players are not yet committing to any positions? Possibly. Maybe they're still on vacation. I don't know. But if the market doesn't get into gear next week, I think that's a pretty telling sign. Is the market in pause mode ahead of, Alcoa's earnings or whatever to kick off the Q4 numbers, and maybe the market is not as confident that the numbers are going to continue to come in better? I don't know. I have no way of knowing these things. But in general, this is what I'm thinking, is the market's not really doing that great of a job. It's just kind of meandering here. And you can also think of it this way, and I'll just kind of close on this note, is that the people that are participating in the market, wherever they are in here, inside of the profile, right? I like to think of them as basically committing to some sort of a position. And when they commit to that sort of a position, right, they want to be rewarded for it. And you have to keep in mind that there's always these two time frames of market happening every single day and every single week and all throughout. And basically that is the smaller time frame people, which is either the day traders or the local type people in the pits in Chicago that sort of act as the middleman, and they're working on the spread. So they're kind of that middle person, and the big institution goes through them to buy. They don't buy directly. They buy from this middleman in the middle, and the middleman just makes the spread. So it's them and the day traders, and then it's the other time frame players, which are the big institutions, right? So remember that all of these people involved in the markets have to be compensated for their efforts. And I don't mean in terms of commission. I mean that if they have directional position, they want it to work out for them. So just think about that for a second. So when you see that there's directional conviction, for instance, in one direction, and then it doesn't follow through. And again, you don't necessarily need to be looking at the profile like I am to deduce this. If you see that the directional conviction is not following through, immediately it should be a signal to you. And I want you to think psychologically, okay, somebody's getting disappointed here. The market's not following through. Somebody thought they were going to get paid, and now they're not getting paid. That's the way that I like to think about it. I always like to just constantly bring myself back to what is the psychology of the other guy? What's the psychology of the other guy, right? Kind of like in Scarface when that dealer that Tony worked for, when he said, never underestimate the other guy's greed, right? That always sticks in my head. Always sticks in my head, I think it's relatively applicable. It's always think of what the other people are thinking and whether or not they're being compensated for the, risk that they're taking or not, and look for different areas inside of the chart where if those individuals are not being compensated for the risk they're taking, are they going to, dump their positions en masse or cover their shorts, etc. And again, just to wrap it up, I draw you back to the video, which, like I said, if you watch this video, you'll see this unfold over the course of a whole day where I record all my actions live. There's a camera on the P&L and all that. You can see it all happening. My basic premise for everything that I was doing that day, and again, it's day trading, but I believe it's applicable to all time frames, is the simple fact that I knew that the people that were committing to the short side over the last couple of days and in the morning of that day, Thursday, they were not being compensated for their efforts. They were not being well compensated. They were selling the market a little. They weren't able to drive it lower, and thus there wasn't a lot of profit in it for them, and hence they all have to reverse their position and go higher. Now in the bigger picture, however, now that you'll see in the video worked out with a great day trade, but in the bigger picture then take a step back and look at a wider view and now say to yourself, okay, but outside of day trading, what happened the next day? Were those buyers that came into the market well compensated? I would say no, right? Because Friday was an inside day, and all that the market did was just build like an immense amount of value in the same area. So everybody that took the market back to where it was, essentially we're right back where we started at the beginning of the year. So this is a really good time period, being that it's at the beginning of a year, to start this analysis right here and now, right from January 3rd, right? And just keep asking yourself every day, what direction is the market going? Is it doing a good job? Give it a grade each day, right? Like I said, I'm giving it about a C+ so far. As the market develops day after day, week after week, from this starting point, right, you get a much clearer picture then of where the market is probably going to head if every day you ask yourself these same questions, come up with an answer, maybe write that down, take as many notes as you can. Those of you that do have access to things like the profile, I mean, I don't even want to get into it because it's beyond the scope of this video, but there's lots of different things that can be done with the profile to sort of gauge directional conviction. But as I was saying earlier, a lot of those same things can be done just with daily bar charts, and simple TA, and using simple simple things that you can see visually on the charts right in front of you, such as, were there higher highs or higher lows? Excuse me. Did the market cross over the prior day's high? Did the price action probe below the prior day's low, but did it close there? Remember, it's all about the O, H, L, and C. And they're very important. And the most important thing in that OHLC is the C, is the close. Was the market able to close above the prior high? For instance, Friday, it was not, right? There was a lot of value built in the same area, but essentially you'd have to give the edge to the bears because the market closed below Thursday's close, even though Thursday's action was so bullish, pushing it all the way up through. Where was the follow-through? Very, very little. So all these things should come into your sort of grading process, all right? So that's it for the video. Sorry for being a little bit lengthy there, but I hope it helps. Again, definitely check out the sort of adjunct to this video, which is this one that I recorded on Thursday. Just look for our channel on YouTube. It's ShadowTrader 01 actually is our channel. ShadowTrader 01 is the name of the channel. You can search for it there, and you can see that's the title of the video right there that you can find. And that's pretty much it. All right. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.